You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, Chris.
Great to be back, Jim.
Watching business television, profits from major corporations up sharply. Good dividend returns, and I'm told that's why people are jumping into the equity market, even though there are so many fears that it's a house of cards and is about to collapse at any moment. Yet, where else can you make money right now, Chris?
Yeah, exactly. The Fed's basically forced you to go into the market because you lose so much money just parking it in a savings account or checking account. So, yeah, everyone's kind of being forced in the market, which at some point is going to wake up to the reality of what's going on in the economy. For example, just in Q2, I mean, it's the GDP estimate's the first print is going to be released next Wednesday, and there's no question that by the second or third it'll be negative, showing that the U.S. is in official recession. And that should really cause quite a blow to the equity markets, I would think.
Although it's been explained, just because the equity markets are high, I just saw an anchorman on TV looking at the business numbers they do every night. He says, "Oh well, look, the Dow and S&P are up in record territory again. I guess that means the economy's doing really well." But is it, Chris?
It's doing no better than it was 2008. But, you know, there's been so much inflation pumped into the system, even though, according to the CPI, there hasn't been. But I was reading John Williams when the new CPI number came out. So it's 3% for Q2 based on that, which is 50% above Janet Yellen's target rate. And using how it was measured in 1990, it was almost 6%. And measured in how it was in 1980, it was almost 10%. So yeah, there's quite a bit of inflation out there, but people, I think, just want to ignore it. I mean,
well, we mentioned that the government, as soon as inflation starts to rise rapidly, they start removing things like energy and housing from the inflation index. They say, oh, they're too volatile. Well, but the thing is, you have to pay for a house to live in or an apartment. You have to buy fuel for your vehicle. If you take fuel out of the equation, and it's part of your food cost as well, because farmers need fuel for their tractors, well, my goodness, yeah, you can keep inflation down to 2% if you just keep removing all the items that cost the most.
Yeah, they take out food, too, which, I mean, how much more essential is than food? Other than energy and food are the two most important things. Yet they try to emphasize core CPI, which exclude those things. And apparently have been convincing and fooling a lot of people.
Well, that's why pay raises are so low. Your boss says, look, inflation's only 2%. But sir, my house is costing me 10% more. It's costing me 15% more to drive my car. Well, no, not officially. The government tells me it's only 2%, so I'm only giving you a 2% raise.
Exactly. Yeah, that's another reason is, they don't have to make, their Social Security payments higher because that's adjusted for inflation. Instead, they just screw over those who are receiving it.
So really, people who are getting their old age pensions should have seen a 10% hike in their pension payments this year instead of like 1.2%.
Yeah, exactly.
Well, you wonder why Grandma is buying cat food now and she doesn't have a cat. You know, it's laughable maybe for us, but not for them.
I know.
And I was also seeing too, with major corporations bringing out their new profit numbers today, the price of gold down, people are throwing more money into the equity markets. Is that a bad risk right now? These markets are not really supported by the economy?
Oh, definitely. I mean, the economy is contracting. And, I mean, you could make it an argument that it's never recovered from 2008 because of real inflation, not inflation according to the CPI.
Well, one positive thing I saw this week was that SNC Lavalin, a giant engineering firm in Quebec, is putting $425 million into the diamond industry in that province, and they expect it will make Quebec the 6th largest diamond producer in the world. Who thought diamonds would be coming out of La Belle Provence?
Yeah, really.
Has that had, has that opened a lot of eyes in the mining industry?
Not yet, but I think it will over time. Because just doing that is, you have to show, the results of that investment for people to start really getting into it.
And diamonds aren't affected by world economies all that much because rich people remain rich no matter what's happening, and they're the ones who buy diamonds.
Exactly.
Is that something that maybe people investing should look at? What kind of industries or technologies are recession-proof?
Yeah, and more importantly, I think, is inflation-proof because, I don't know how it is in Canada relative to here, but the cost of living it's noticeable every year, the increase. So you want to invest in things that are, hard assets, basically, both in the physical form and if you're going to get it by the equities, equities that are in the resource sector, including gold, silver, uranium, oil, gas, diamonds. Just anything, for example, if you're a retailer, your real profits are just going to crumble. As we saw this quarter, in the U.S. at least, retail sales were non-existent if you adjust them for inflation according to the government, which is a kind of a joke. Even though everyone's still pushing, the economy is still recovering, blah, blah, blah. How is it recovering? I've never seen an explanation.
Well, of course, they said all the jobs lost in 2008 have been recovered, but they're muck jobs. Guys who used to be middle managers making $80,000 a year are now flipping burgers.
Exactly. They don't include two primary categories. That's those who aren't even counted in the workforce, and the qualitative aspect of jobs. In that a lot of these jobs have been created are part-time, but they count a part-time job the same as a full-time job.
Mr. Visa doesn't.
No, he does not, which, it'll hit everyone sooner or later, and I think, as soon as this year, because as I previously mentioned, Q2, there's no way it's going to be positive by the second and third revision. Especially if you're looking at retail sales again, that's a big driver of the economy because we're a consumer and debt-based economy.
Well, I still wonder why, with U.S. banks paying nothing for their money, why credit cards are still charging you 29%.
I think it may just be the risk out there, people not paying back. I don't exactly know. But yeah, credit cards you gotta look out for them. They can cost a whole lot more than what you think, even because, most people look at the teaser rate for the first 6 months, year or so.
6% or 5% for the first year, but then it goes up to 25.
Yeah, exactly.
So it was cheap money to start with, but whatever balance you have left over at the end of the year, it's going to be 25% or more.
Oh yeah, easily.
Anything else in the mining sector that's really caught your eye over the past week?
No, today it's a great buying opportunity in gold and silver. I think palladium's still doing quite well. Zinc has really continued to be on fire. It's trading above $1.08. I think the first time I brought it up in an interview with you was at 82 cents last year, which is quite good for a base metal considering how the world economy is unimpressive, to say the least.
But I was going to say, everybody's talking about electric cars, and you need zinc to make batteries.
Yeah.
Simple as that. So if they plan to make millions of cars, the demand for zinc is going to go up.
Oh yeah, and what is palladium trading now? It's still taking a breather, but it's still almost $870 an ounce. Wow. So, these are buying opportunities for those, especially in the gold and silver markets, because when you're at or just below or just above the cost of production, then there's always looming shortages because, the higher cost mining companies either have to shut down or go bankrupt.
Exactly. And if we're expecting a downturn in the equity markets, where do people put their money, Chris?
Gold and silver.
So right now, it's below its peak cost from a few years ago. Most people, again, you're not going to get an instant return, but if you're looking long term, it should be a good investment.
Even just a year out, there's a lot of catalysts on the horizon. Plus, countless black swan events that could appear.
What's a black swan event?
Just something that no one anticipates, but it's a shock to the market, such as the 2008 financial crisis.
Although I did have an expert tell me the big recession was coming, and my boss wouldn't let me run the story because he said, well, look at the Dow. It's at a record level. And I said,
so, I should have told him, yeah, it's the same. I think the Dow hit 14,200 in 2008.
And then 9 months later?
Yeah, exactly.
Exactly. Chris, thank you very much for chatting with us.
My pleasure.
My guest has been Chris Marchese, mining analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. You can forward comments to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.